Good morning, this is Robin Bieber on ChartTalk on the 1st of June at 6:50 in the morning London time. The chart in front of us is July RBOB, and more of that in a minute. The rally on Friday was caused pretty much by both Brent and RBOB holding their 13-day moving averages, green line here, and we'll see that on Brent in a minute. And then, once that had held, the way was open for a serious test of the 5 and 8, the red and blue line here, and then once through there, a rally to the recent top of the range stroke resistance was highly likely and what duly occurred. The key to, and this happened on every single contract, the key now is what happens at the critical resistances. And we'll just have a look at first line continuation RBOB, because we get a critical resistance at 108.85. We made a high on Friday at 108.82, and the combination of this resistance, a 50% correction point on the first line continuation at 108.85, and the CP, the first CP, 38.2% at 109.16 is the key. 108.85 to 109.16 is serious resistance. We've made a high at 108.98 so far today. Were we to move and close over 109.16, the odds are A, on higher numbers, and B, all the other contracts scaling their key resistances and moving on higher to the next leg. But at the moment, there is no next leg higher. We have done everything we should have done by moving over the 5 and 8s to critical resistances. And these critical resistances are relevant on every contract. In RBOB's case, it's 108.85 to 109.16 over there, and the odds are a rally up to the 110.15 area, which is the 100-day moving average on the continuation. Now, if we look at WTI, we can see a similar pattern. It rallied extremely well. It now must stay over 35.18. It's 35.26 at the moment. So it must stay over 35.18 and then take out the 100-day moving average on the first line continuation chart here. 35.45, 44.45 area. Over there, then it's got another dollar higher to 36.35, this level here. But I cannot overestimate the strength of that 100-day moving average around 35.45. So it's got to stay over 35.18 to be challenging 35.45, and a failure to hold 35.18 would suggest a return to 34.72 area and the 5 and 8 day moving averages, which are down between 34.30 and 34. In other words, 35.18 is a bit of a pivot, but only upside is green lighted by moving over 35.45. So we've got RBOB now at the key resistance at 108.85 to 109.16. WTI at its initial support pivot at 35.18, and then the critical 100-day moving average at 35.45. So two so far of the 5 contracts are at critical points. Brent, less so, but it must hold over 37.24. In other words, by staying over 37.24, it displays upside potential, which would be realized if RBOB and WTI can move over their resistances. If it fails at 37.24, which is possible and indeed quite likely, then we'll be looking for a test of the 5 and 8 day moving averages between 36.70 and 36.40. Note that on both RBOB and WTI, although we've got positive stochastics, were the market to fail, there would be bearish divergence. This is a worry. Heating oil has done pretty well, but now it must, if we look at the continuation chart, it must hold over 103.40 or get over 103.40 to begin some upside to 104.50 and then 107.12 on the contract chart. This 107.12, which would be a logical move from the short-term moving averages up to the range resistance. But we must hold the 5 and 8s between 102.15 and 101.67. You can see them here, these red and blue lines. The initial pivot today is 103.40. Watch it carefully. Note the negative stochastic, which is not encouraging. Gas oil Needs to move and close over 307.50 here, the range resistance, to have serious upside. It's okay whilst above the 5 and 8s between 291 and 289. So the stage is set now for serious tests of resistance, and these resistances are critical. 35.45, 100-day moving average, WTI. Brent hasn't got a key resistance, but it's got a key support at 37.24. Heat 103.40. RBOB 108.85 to 109.16, absolutely the most important pivot on the board, and gas oil 307.50. Now, if we look at the back end structure for a second or two, we can see that there's a good recovery, in fact, a very good recovery on the red deck on TI, but it must now stay over 280. It's printing minus 279 to have some upside potential. At the same time, Brent has slipped back a little bit, a very good rally, but it has got to get over the 8-day at 372. It's printing 385 to have upside. So the red decks, which are often a good barometer and counterbalance the flat price, in other words, do they to support the move or not, is encountering strong resistance, as is the flat price. Now, if we look at the 60-minute chart, the right-hand chart here, you can see that it's getting overcooked, and this is looking as if we should dip back during the course of the morning, which is going to make, and this is August Brent 60-minute, we're going to make the 37.24 a very important pivot this morning, which needs to be watched. RMOB is also looking, it's a bit thin, but it's looking a little bit toppy, and as if we should see a correction back from Friday's strength during the course of the morning, just to cool down a bit. The key then will be whether the 5 and 8s can hold. So the message is very simple. We're up at logical points where the market could easily fail from having held the 13-day moving averages, moved over the 5 and 8s. That then normally makes us test the key range resistances, the CP resistances, whatever, particularly CPs on RBOB. But there is no further upside until we can move and close over these key resistances. They are absolutely critical to any further upside, because the market has completed a price cycle by moving up to where we are now. It needs something else to take it through these resistances for the next leg higher, or we fail and go and retest the 5 and 8s. That's all for today, folks. Good luck, good trading, and bon appetit.